Here is some of the evidence that the Fed will continue hiking rates, probably up to that 5.5% Fed funds rate that they've kind of inclinated they're going to. A couple more 25 basis point hikes most likely. Things like this from Wall Street Journal. I don't subscribe to them, so we're not going to go into this too much, but just some quick hitter articles, headlines of what's going on. Inflation firmed up. Consumer spending jumped in January. So again, the Fed looks at that and says, hey, this is great. This is wonderful. Look at people are spending. Labor market is tight. This is wonderful. This means we can crush them even more. We can crush the demand of the economy. And this is completely backwards thinking. And this is how you would think if you're an academic, if you're reading from a textbook and you are doing things backwards. But at the end of the day, a fiat inflationary economy is a backwards economy. So you kind of have to think that way in order for the system to keep justifying itself and keep running. Because if we pay down debt and we pay everything down, the system implodes on itself. Because as Mike Maloney says, money makes and currency takes. The dollar is debt. It is debt. The dollar is debt. The dollar is debt. Fiat currencies are debt. Fiat currencies are debt. Fiat currencies are debt. Keep saying that. Fiat currencies are debt. That's how the game works. That's how the game is set up against you. You keep saving in a liability that you think is an asset. So this is, again, one of these reasons they're probably going to keep raising rates a little bit. Key inflation measures rose 0.6% in January, more than expected. So they love, they're different little metrics, PCE and things like that. They love these little things where they're, they like to strip them out, the hedonic adjustments, things like that. But again, one of their key little metrics rose 0.6% in January. Again, alluding to the fact they're probably going to continue raising rates a little bit. Then we have Mr. Jamie Dimon himself. Here we go. So oddly enough, I was about to start doing the video of some of the reasons why, in my opinion, they're going to continue raising rates, just more justification of what they've already kind of outlined and what they've said they're going to do. And they've been pretty open with and clear and transparent with what they're going to do, really, especially over the last year or two, last couple of years. But JP Morgan, I found this right before I went live. JP Morgan, Jamie Dimon says U.S. interest rates could hit 6%. And again, this is alluding to the Fed funds rate, really kind of the low end of the curve. And you're going to have the 10-year, the whole curve is going to be inverted still, as it's been for a while now. I believe it's been a year. I don't think it's been a year and a half. It might have been a year and a half. We have to go back and look. But that, again, traditionally has told us there's going to be a recession in the next 6 to 18 months. We're getting to that point, really the next 6 months or so by the end of the year, where it's that time period has run its course and a recession should be here. And again, I said the recession, we did videos, I think, in last August, where I said, I called it before the Fed, even the negative prints even came out, the successive quarters of negative GDP prints, that happened. I said, we're already in a recession. And quite honestly, we've been in one since 2008. So this isn't like breaking news or something like that, but if you're actually paying attention to the underlying fundamentals of the economy, the massive currency printing, like we talked about before, all the currency printing divided by the median price of a home, or just the S&P 500, and it's just flatlined. People think it's going up, but it's just flatlined because of all the currency printing. It's obfuscated reality. So here's Jamie Dimon again saying, and he's the one that Warren flip-flopped like a year ago and said, hey, things are going to be great. And then he said, oh, wait, I think things are going to be crazy. Here he is saying it's 6%. So again, take these things with a grain of salt. Question everything, right? Even the existence of God himself. So make sure you're doing your due diligence and build a community of like-minded people and people that think clearly, think with first principles, think in terms of nature's law, and actually use fundamentals and truth when they're doing things. They don't have agendas at the end of the day. That is why so many people get it backwards. Again, the government has an agenda to keep you poor, dumb, stupid, and poor, and dependent on them. So they're not going to teach you anything in school, government-run schools. The media, same thing. They're in bed with the media, public-private partnerships now with the companies. They're doing this everywhere. Big tech, they're censoring things. They do not want you independent, right? A strong and vibrant middle class and people that own their possessions, own their things, that means they don't need government. If you don't need government, then I don't need to vote you in. I don't need you to do anything for me. I don't need you to give me extra debt and give me extra handouts and things like that and take away or give you my liberty just for a little more security. I don't need any of those things. This is the unraveling of the system. This is what is happening to us and has been happening for the last 100 years. And most people, they can't pinpoint it. They don't understand what is truly happening, right? The broken money is what is allowing all this to happen. And the last one is, again, I find this very interesting because it's, again, could go either way. That's why you have to set up your portfolio. It's not financial advice, it's freedom advice in a way that is structured to really balance through all different weather conditions. Investors favor allocations to macro credit funds, or bond markets and things like that. So, I mean, again, to me, when the rates are rising, why would you be buying bonds, right? If the system has to correct and flush itself out, why would you be buying bonds when the bond value is going to continue going down? This is where it'd be smarter to save money, right? If the interest rates keep going up, you just save money and you'll be good to go. However, again, the bond market has been signaling an inverted curve saying, hey, the long end is going to have to come back down because the Fed's going to have to truly pivot and really start bringing that Fed funds rate back down to the zero bound like we had before a couple years ago. So this is why people here, you got a lot of people thinking, hey, they're going to have to, I'm at the long end of the bond, the risk curve here, or the credit curve, and they're signaling, hey, we think there's going to be lower rates in the future, which means bond prices go up. So again, this is the last thing I'll say is that what's tough too is understanding the short term versus long term. When I mean short term, you're probably looking 6 to 18 months, and then anything long term, especially when people talk about things, this is very important. Generally, from everything I've seen in the last 14 years, when people talk short term, I'm not even sure how to exactly say it, but when people are talking shorter term, they're probably talking 6, 12, 18 months. We got a lot of financial people saying that. Anything over that is really long term, because a lot of the hedge funds, they're in this operating mindset of a year time spans, maybe at most, year time horizons. They're trying to do quarterly earnings calls, companies are, stuff like that. So these people are operating 6, 12, 18 months. This is a short term and even medium term for some of these people. Like they need earnings, they need them now. And that's where you get stuff like this. This is most likely more of a long-term approach. Like, hey, long-term, a year or 2 years from now and on, we know rates are going to come back down. It has to. So that's where you have to be able to decipher these things. And again, that comes with experience and repetition to understand, hey, what are they talking about here? Because some people just would flip from one thing and another. Like, well, rates are going up, but now people are saying they're going into bonds, so I should get into bonds. But you have to get your time horizons right. And this is why at the end of the day, I'll leave with this. The most important thing is to become independent, resilient, and become wealthy. So you have choices and you have freedom, and save in a hard money. Save in a money that can't be taken away from you, can't be censored, can't be printed, can't be devalued. That's why I'm a Bitcoin user, believer, and I save in Bitcoin. Finite money for my finite time. It's the only 2 finite things I know of. And it's the internet money. There's nothing else can do that. Gold can't do that. It's shown to be, for thousands of years, the best value storage we've had, but it can't work in an economy because it's continually centralized, and it's a big honeypot. The governments come in, melt it down, clip it away, print out IOUs on it, and they destroy it. So those things can't work. We need something that can go at the speed of commerce, and that's where Bitcoin comes in at the end of the day. So I appreciate you coming to my TED Talk. This is not financial advice, it's freedom advice. And this is what the mission we're on, to continue educating people as to, again, your money is the value you provide. It's value creation. Your time and energy spent consuming or making goods and services for the people. That's where money comes from. That's the money trade. And humans can choose what they want to do and however they want to transact and provide value and exchange that with each other. That's why Bitcoin is gaining traction. There's no marketing department. There's no CEO. Bitcoin is organically working because it is the hardest money in the largest computer network to ever exist simultaneously, whereas fiat currencies are completely broken and losing power over time. So they have to put a gun to your head and say, pay your taxes in this, you're going to jail. But that's not money. That's because they have to do that. They have to do that because no one would use it otherwise. Why would you hold a liability that you're told is an asset? Why would you hold something that's losing value over time and expect to get wealthy over time? It's because they don't want that for you, number one, and it's crazy to do it, number two. Why would you do that? So again, please put your comments in below. Please share this out. The algorithm hates truth. The algorithm hates truth getting out there and talking and questioning the mainstream narrative. And I can only do this with you and building this together, a community of like-minded people. So I implore you, if you feel inclined to do that, please share this out, because the algorithm does not like truth. The algorithm likes a narrative. The algorithm likes centrally controlled economies, command and control economies. So I appreciate you. Please put your comments in here and let me know your thoughts and again, what you're doing to help educate other people. And we need 10,000 times as many people educating and building YouTube channels and blogs to get the truth out and overwhelm the system with truth. I was just talking to George Gamm this morning on Cafe Bitcoin Spaces, and his big thing is education and saying we need to educate more people. We need to educate more people. And I just told him, George, this is the reason why Bitcoiners are Bitcoiners, because you don't change Bitcoin. Bitcoin changes you. I thought I was a very intelligent person, and Bitcoin made me 10,000 times more intelligent than I already was. And it does that to everyone. I see that happen, though. I'm not unique. It happens to everyone that gets into Bitcoin, and that quells that education lack that George is talking about and that all of us see in society, in the ills of society. It encourages people to start learning and understanding what's going on, and it orange pills you and sends you down that rabbit hole of Ron Paul and liberty and freedom and sound money. So I appreciate you, and I look forward to seeing you on the next one.